10-year note Treasury yields held at around 3%, where it's been trading the last several days prior to today's FOMC announcement. After FOMC, the Fed came out. They raised 50 basis points as expected. They talked about raising rates down the road over the next several meetings of 50 basis points, but they ruled out a 75 basis point hike in the near future, in the near term, while also announcing their quantitative tightening plans, which will begin in June. So Treasury yields, which were hovering near 3% prior to FOMC, moved lower down to 290. It was taken as a less hawkish announcement, less hawkish press conference. And at this point, the market will continue to kind of dance around and absorb a lot of what we saw today. It'll be interesting to see what happens in the coming days with more data coming out. We'll talk about that in a moment. But again, seeing Treasury yields decline after the FOMC announcement today. Now, what does this mean for volatility? Well, if you check out that CBOL index over at cmegroup.com, you'll notice that prior to today's Fed meeting, we saw volatility holding near year-to-date highs. Despite the fact we've seen little up and down movements over the last several sessions, we were holding near those year-to-date highs. Today, we saw a big move lower as we got past the big event. The uncertainty of FOMC came and went. Now the market knows what the Fed's doing, or at least what the Fed told us they're doing, and we saw volatility moving decisively lower today to end the session. Lastly, what do we have ahead? What's coming up in the next couple of days? Well, we got that claims number coming out tomorrow. That's our in-the-moment look at the jobs report. We also have Friday's non-farm payroll, which is expected to be around up 380,000 jobs with average hourly earnings to hold near steady to where they were last month. And this all comes after today's ADP number, which came in up about 247,000 new jobs. However, it is the lowest increase we've seen since the onset of the pandemic. So it'll be interesting to see what happens on that Friday job report and how the market will react. We'll also keep an eye on the FOMC aftermath, we call it, sort of how the market does a knee-jerk reaction today and how it absorbs it over the next several sessions. We'll kind of give you a clear idea of where the market is going or where the market is looking based on what the Fed told us today. So 10-year note Treasury yields, after hitting 3% over the last several sessions, see a modest pullback after a less hawkish tone from the Fed today, ending yields at about 290 ahead of tomorrow's claims and Friday's non-farm payroll number.